Welcome to the Royal Ties Podcast. My name is Clark, the Financial Credit Coach, and I will be bringing you information acquired through first-hand experiences in order to help you increase your credit score, reduce interest rates, increase savings, and eliminate debts. Doing it for the community, from the community, and by community I mean any and everyone who wants to learn and evolve. So let's get right into it. This is season 2 of the Royal Ties Podcast. After a very successful season 1, I really wanted to bring something different every season. So this season, brought to you by the Cadet Care Foundation, I will be bringing you the knowledge you need in a way that you can relate to. Thank you for the support and welcome back to our podcast. Today, we're diving into how your credit score can significantly impact what you pay for insurance. You might be surprised by how interconnected these aspects of your financial life are. Let's uncover the relationship between credit scores and insurance rates. And when I say insurance rates, it's all kinds of different insurance. You're going to see in a second. So, we're going to do it in a different way. We're going to do it through a story about someone named Jenny, which you might find quite relatable. Hang on tight. Here we go. Now listen. Decoding credit-based insurance scores. So basically we all understand how credit scores work by now, and we all understand how insurance works because we need insurance. We have to have insurance on our cars, our homes, all of the above, right? But we never really had anyone teach us how our credit is going to affect the rates that we get with our insurance. So let me tell you about Jenny. See, Jenny is a freelancer who juggles multiple gigs. She always thought insurance rates were set in stone. That is until her car insurance renewal quote came in surprisingly high. She's like, oh, okay, what am I going to do about this? Well, this sparked her curiosity about how insurers determine rates, leading her to discover the role of credit-based insurance scores. Now, these scores are really similar to the credit scores used by banks and, other financial institutions. It's really similar, but there's a different thing that they use because they are tailored by insurance companies to predict risk. Now, you ask me, okay, well, what's my credit score have to do with risk, right, Clark? Like, okay, I may have been late for a few, payments a few times in the past, but what's this have to do with the way that I drive or the way that I take care of my home? Wait for it. Because see, what they do is they consider factors like your payment history, your credit utilization, and the length of your credit history. So for example, Jenny, a few missed payments and high credit card balances has dipped her score, which her insurer saw as a risk indicator. Crazy. Listen, just keep it real. That is crazy. So Jenny had a few late payments and a few things, and all of a sudden she's a risk for the way she drives or how she takes care of her home. But let's focus on what we can change. So how it affects your wallet. After learning about this, Jenny realized why her premiums had gone up. A higher insurance score generally leads to lower rates, while a lower score can result in you paying more. It's kind of that simple. But this is because there's a proven link between one's credit behavior and the likelihood of filing insurance claims. Listen, numbers are numbers. They run statistics. They run them worldwide, provincial-wide, countrywide. It is what it is. We can't change the numbers. This is what they're going to base it on. But remember, we can change how our numbers look to them. So across the board, Jenny's experience isn't unique to auto insurance though. See, it's the same with homeowners and renters insurance. However, she also learned that not all states and provinces use credit scores to set insurance rates, which can be a relief or a hurdle. And it just depends on where you live in reality. Now, what I want you to focus on is what you can't control. Remember, I talked about that a minute ago. Improving your score. Pay attention. Here comes some gems. Motivated to improve her situation, Jenny took steps to enhance her credit score. She started by setting up payment reminders to ensure she paid her bills on time. On time. I'm going to go back. She set reminders to make sure she pays her bills on time. And she worked to pay down her credit card debt. Low utilization. So Jenny has low utilization and her bills are paid on time. And guess what's going to happen? Her score is going to go up. That's all it is. So she also began regularly checking her credit reports for errors, correcting any discrepancies that could harm her score. I know. Insert memes all here. You know what I'm talking about. Borrow Well, Credit Karma. These are the things that you need to be doing all the time. Season 1, you heard it almost in every episode. Season 2, it's going to be cemented into your brain until you do it. Or every time you see your credit score go down, you're going to remember, I didn't do what I needed to do. What I suggest you do is consult the experts. And by consulting the experts, you'll end up getting the right advice that you need. Jenny also sought advice from an insurance agent who helped her understand how different companies weigh credit scores. So I'm not the only expert. Insurance brokers can tell you, hey, this is what the insurance companies look for. It's an option. Always make sure you utilize all your options and look around and ask questions. With this knowledge, she shopped around and eventually found a provider that offered competitive rates despite her previous credit hiccups. So you see, you go to the top insurance companies, they probably say, but there's second tier, there's third tier. There are pros and cons, but there are options. Remember that. So through this journey, Jenny learned the importance of comparison shopping. She realized that insurance companies vary significantly in how they assess risk and set premiums. So getting multiple quotes was crucial for finding the best rate. Listen, I say that in every case. You always want to shop. You always want to get informed. You always want to find out what's going on in the market. Do you take advice from the first person you listen to? If it's not me, don't do it. It's not worth it. Get informed. And you know what? Even if it's me, get informed, because you can match my information to other people's information, and you can match my information to the results, and you'll know what's going on. So literally, in conclusion, Jenny's story highlights a critical financial insight. Your credit score plays a key role in determining your insurance rates. By taking charge of her financial health, Jenny not only improved her credit score, but also her peace of mind. I mean, come on, peace of mind. I don't have to say anything else. Listen, knowing she was getting the best possible deal was the peace of mind that Jenny needed. And in reality, it's the peace of mind that we all need. Be Jenny, be me, be you, but live like me, like Jenny. Live and learn from the mistakes of other people. Apply what you've learned today. That's it for today's episode. If Jenny's story resonated with you, or if you found this informative in any kind of way, don't forget to like, follow, and share. Tell a friend to tell a friend. Let's bring financial illiteracy to an end. It starts here. Welcome to season 2. We are back. Cadet Care Foundation, for the community, from the community. Get with me. My name is Clark, the financial coach, and my motto is simple. Pay attention or pay for lack of attention. Please follow me at Clark, the financial coach, on Instagram.